going on, guys? Another quick update video. Again, this video is going to be brief. I'm going to be right to the point, just go over the macros and go over the tracking updated. Friday close, I'll be going over all of the charts. I usually go over the OBV, volume, RSI, Bollinger Bands, all that stuff that I usually cover. After Friday close, I'll update all those charts and I'll go over that. It all looks great. No need to talk about that every single day. I'll also cover SPY on Friday close as well. But for now, another brief video, just really quickly going over the macro perspectives of AMC and the tracking updated, which looks absolutely phenomenal. Today was a great day for us. I know it doesn't feel like that because it was red. If you recall my video yesterday, I said today would be red. But it was an absolutely perfect day, and I'll get into that. But first, we'll start with January 15th versus the macro once again. Again, January 15th, 1 minute time frame on the left, and then AMC's macro, a weekly time frame, 3 years of price action on the right. So 3 years of price action versus not even a day. And again, January 15th is very important for AMC. It's the pattern of AMC. AMC is January 15th on every single time frame, from the 1 second chart all the way to the monthly chart. January 15th every single day. So once again, covering this because I'm illustrating to you that we are at the end of the macro. We are at the end. There's no more pattern left. Once this V concludes, that's it. Macro break and squeeze. So once again, W here in the yellow, as you see it here on the macro, your January squeeze equivalent here that you see here. W ascending into your June squeeze, W ascending into your June squeeze, the flag right here, the flag, and then the downtrend. 4 touches on the top. 1, 2, 3, 4, 3 on the bottom, 1, 2, 3, and then your knife into your V, which is where we are now. Again, this chart's old, and once we finish the V here, once this V concludes, which would conclude with a weekly candle that touches $13 to $14 roughly, from there we should be getting our macro break. This is a micro break that you gap up over the entire range. We're looking for the macro break, gapping up over the entire range. Which pretty much I'm saying is we're going to be gapping over all-time highs at $400 and heading for my price target of $1,400. So that's that. Here is the zoomed in version, the Webull chart, updated once again. So here is the wedge, your 4 touch points on the top, your 4 touch points on the top, your 3 on the bottom, your 1, 2, 3 on the bottom. From your third, you have your third touch on the wedge, a higher low, and then your 4th touch. So again, from your third bottom, there's your 3rd touch on the wedge, a higher low, and then your 4th touch on the wedge there. You knife from there into your V, and here we are today. Again, this is just updated now with today's price action, the weekly candle. I mentioned in my video yesterday, more than likely this candle would close in this range. Whether it's red, I don't think it'll be red, I think it'll be a green candle, but more than likely it will close in this range. And we're looking for a weekly candle up to $13 to $14 roughly, to conclude the V. As you see over here, all these touch points hitting that horizontal line, and we're looking for the same thing over here. That would finish up the V for us, and then from there, macro break into our squeeze. This chart is incredible. This is all you need to know. Legitimately, January 15th is the only chart you need to know, and you'll understand AMC's price action. So that's that. Let's get into the macro now from IPO. Again, starting from this macro trend that we just met recently, all the way from IPO, you get your first squeeze here, your January equivalent, a pullback into your June squeeze. Over here, same thing, starting from this trend, your first squeeze, January equivalent, pullback into your June squeeze. You get the V shape, your macro break in the blue box, and then your downtrend in a descending wedge, green, red, blue, your flat portion, and then that's it. So again, you're taking your support from this peak here all the way down. That's the bottom support of the wedge. The top resistance of the wedge is this trend here all the way down. And the point at which those two trends meet is your 3rd bottom, the all-time low landmark, and the end of the flat portion. From that point is uptrend into a squeeze and a new macro, and that's where we are. So from your January equivalent here, your support trend, and then from the V, your resistance trend, and the point at which they meet is your 3rd bottom, the all-time low landmark. And from when we hit that point, we're now forming an uptrend and about to see our macro break. Again, meeting this trend, the most macro trend on AMC from IPO. Your first touch point here, 2nd and 3rd right there as support, 4th and 5th as support, break below, reject, reject again, reject again. This whole flat portion, you're rejecting this trend until you gap over it, macro break, a new macro, and then all the way down again, back to the trend as support. Looks absolutely perfect. Nothing else to say there. Getting into the flat portion again, updated now. So here you are coming down to your first bottom, very choppy, gap up, double peak move, down to your second bottom, a higher low in the daily. Over here, same thing. Come down to your first bottom, choppy, gap up, double peak move, come down to your second bottom, higher low in the daily. Get that little cup on the side in the yellow as you see it here. Gapping up from your second bottom on both sides. You get your tri-peak, 3 pokes above, 3 pokes above, and then your sell off into your third bottom, your all-time low landmark, which is the point at which the support and resistance of the descending wedge meet, and the end of the macro from which you form an uptrend. Here you are, and then your macro break right here into a new macro and a squeeze, and we are right there. We are moments away from seeing our macro break. Here is the move off of the third bottom and this pullback. You get these candles pretty flat here, but a quick retrace before you get January 15th, this candle here, gap up. This is the end of the macro right here. And currently, that's where we are. The uptrend off and now pulling back, very flat here. Just like we saw here, the candles, I mean, it looks the same. Even on the daily, it looks the same. Again, date range from the beginning until your peak, January 27th, was 342 days. Current cycle from the beginning to where we are today, 321 days. 21 days away from being one-to-one with the flat portion. Perfect. It looks amazing. Also, the next OPEX target date for a peak is October 31st, which is 13 days away. So that would put us at 334 days, I believe. I think weekends are included, so it might actually end up being one-to-one. I could really quickly check that because I'm actually curious now. Just give me 1 second. So to the daily, get this off. Just give me 1 second. I just want to see where this lands for us. All right, so October 31st, 334 days. Okay, so weekends aren't included. So 334 days is the next OPEX date, which is 8 days off one-to-one, which theoretically we should be playing this out faster as we're tracking through the macro faster. Speed will be relative to volume. There's more volume in the current macro, but this looks great. It looks amazing. Everything's lining up. The stars are aligning for AMC. It could not look better, honestly. It really couldn't. Getting to the tracking now. Here it is. This is an old chart. I went over this in my last video, coming up to this landmark here where you reject, pull back, and you get this chop zone, calling for downside to 850. We didn't get the full downside to 850. Instead, we found a bounce on 896 roughly, and then back up to the trend. That was yesterday, and then selling off towards end of day. I said yesterday, expecting a double top around 1026, and then a sell-off and a potential double bottom at 896. Which is pretty much exactly what happened today. This is the updated tracking here. Here it is. Here's your double top that we got today at open, double top, which would be the equivalent of this candle here. And then the sell-off to come all the way back down to double bottom, which is actually a slightly higher low. And that's where we are. We ended at 922 today. It's possible this is the equivalent of the double bottom. It's also possible we see a down spike at open tomorrow. Very possible we see a down spike at open tomorrow, maybe come a little bit lower to that $9 range to finish it up. But I am expecting tomorrow to be green. Tomorrow should be a green day, and tomorrow we actually should be getting that landmark I spoke about yesterday, that move to 1050 to 1070. I'm expecting that tomorrow. Whether it plays out fully or not, that's what we're looking for. Having now just checked off this bottom now, this is what's next, is this uptrend back up to the middle of the range. The equivalent would be roughly 1050 to 1070. And this is a pullback, and then the rest of the day this is 1 day, by the way. So upside here, you pull back, more upside back up to the trend, and then pull back into end of day. This is 1 day, and then this is the start of January 15th, which was a Friday. So if we see this price action tomorrow, a pop up to 10.5 to 10.7, a pullback, and then just continued upside, and then a sell-off end of day back down to this green line, roughly 950, 940 to 960 range. If we get all of that price action tomorrow, we will be expecting January 15th to play out on Friday, which would look like a move to let me not get too ahead of myself right now, but if we do get this price action tomorrow, we're looking for January 15th on Friday. That would look like a move to $13 to $14 on Friday, and then more than likely a gap up on Monday. And if you recall me saying how this ends, how this macro ends, is with a move to $13 to $14 and then a gap up. And that's exactly what we're looking for. This would be the move to $13 to $14, January 15th, a pullback into end of day, and then Monday is your gap up. That's your macro break. That's it. Squeeze from there. It's the end of the pattern right here. This chop zone right here, and then January 15th is the end of the macro. And then from here you gap up. That's your macro break, and you squeeze from there. That's it. No more pattern after that. And we're there. We are moments away from seeing that. Just the rest of this chop has to play out. It would be amazing to see all this price action play out tomorrow. All this upside and then pulling back to 940 to 960 where you close. That would be incredible. And then we would be looking for January 15th on Friday. So that's that. Zoomed in now. Here it is. This was yesterday. Calling for a double top here. So here was the move we hit yesterday, the landmark we hit, this red arrow, and then pulling back end of day. And I was saying today we're looking for a double top at 1026 roughly, and then potentially a double bottom at 896. And here is the updated chart, and pretty much exactly what we got. We got the double top here. So here's the first top, pull back, double top, first top, pull back, double top, and then sell off all the way back down to double bottom. Again, we didn't come as low. I have double bottom with a question mark here. It's possible we have a down spike at open tomorrow. It's also possible at open we just start, just shredding to the upside all day before selling off end of day. If we get all of this price action tomorrow, that would be ideal. It looks great. No complaints at all. I'm expecting tomorrow to be green, possible down spike at open to low $9 range, potentially double bottom 896 at open. It's possible. But yeah, open down spike, definitely on the table, but I am expecting tomorrow to be green. And I will be playing contracts myself, short-term degen shit. And that's pretty much it. Could not have asked for a better day today. Absolutely perfect price action. Looking for upside tomorrow. Nothing else to say. This is it. This is the end of the macro here. This is the end of comparing January 15th to the macro itself. 3 years of price action compared to January 15th. Perfect touch points. Perfect movement, perfect everything. Zooming in on it, it looks amazing. We're looking for a weekly candle to $14 to finish up the V. Macro break from there. The actual macro perspective from IPO looks amazing. Coming back down to this macro trend in white, establishing support. Third bottom, all-time low landmark. The point at which support and resistance of the wedge meets. That's the end of the macro into an uptrend into your squeeze. This looks amazing. The flat portion is pretty much synced up one-to-one to the January 2021 cycle. It's pretty much one-to-one. It looks amazing. It looks absolutely amazing. And that's it. The tracking looks great. Called today pretty much perfectly if you paid attention to my video yesterday. That's it. That's it for this video. I'm trying to keep these short until Friday. I'll cover everything. All my charts updated. I'll cover everything. I'll cover SPY. I'll cover it all. That's it. That's it for the video. See some green tomorrow. Catch you guys in the next one.